Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. Well, it's earnings season, which can bring about some testing times, but this quarter, it has so far been fairly smooth. Meta enjoyed a nice beat with predictable market results. Netflix beat expectations. Look good if you don't look too closely. Alphabet jumped on strong results, and Tesla sales results were strong, but the market does not particularly like the margin pressures that are emerging. Only Microsoft disappointed to a degree, with cloud sales growth visibly slowing, although the company put as much lipstick on that pig as they thought was reasonable. And probably rightly so, if all of its AI efforts bear fruit. Amazon will report next week. Apple will be in shortly, and I have to say, with a much anticipated balance sheet update, again for the nth quarter, it always seems, leaving Nvidia as the last to come in. The NASDAQ 100 has broken out and is confirmed by the Standard & Poor's 500, although for our Canadian subscribers, the TSX has not confirmed those two growth stocks indices. This looks to be very much of a narrow AI-driven kind of market, which is still not particularly interested in the run-of-the-mill stocks, although the Dow 30 has enjoyed a nice 13-day run. There is no question from the SVA market action in my own mind that the U.S. market wants to head higher, and I continue to expect that the FANGs in general will be at the head of the pack. Thursday was heading to be a big day until news from Japan kind of spooked the market, but today all is forgiven and it's onwards and upwards. So on that note, let's see what the FANG stocks actually did in this earnings week. But before we take a close look at those FANGs and what has been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, well, let's start off with Meta. And Meta was running into a little bit of resistance, trying to escape its mid-super growth price, but the good numbers have really caused this stock to jump. And this going back over some while, the Meta is quite interesting. You notice that each of these little triangles here, that represents an earnings report. And the first one way back here was very poor, and the stock just cratered. However, had it fallen from its bubble to its growth price, that was a 73% decline, and that was about it. We got, I think, what I would call a confirmed buy here, but look at this, another report, big jump in the stock. And in fact, we didn't have to make a decision at its super growth price. It jumped over it. Same thing happened here when we got to its low super growth price, which is 4.5 times book. And although we don't have the little triangle here yet, it will be probably in next week. And again, nice results. So looking good, and I think heading towards its bubble price. Netflix, Netflix had nice numbers until, as they say, you kind of look at them closely. You know, they said we had an increase of 5.89 million subscribers compared to the previous quarter. Well, that sounds like quite a bit, doesn't it? Well, it's a 2% gain. Sounds much better than if you use the actual number, doesn't it? Amazon just continues to float along its bubble price. They're going to be reporting next Tuesday, and we'll see what impact those earnings have on this stock at that point. Certainly, it's a stock we need to hold. Nvidia is just been kind of rising, kind of kind of through a sort of series of channels, isn't it? From the HB2, the HB3, the HB4, the HB5, and now breaking above the HB6, which is an all-time new high. And that continues to float between those two numbers. It's going to be very interesting to see if this can break out one more level. And certainly from the trend of the earnings, it might be possible. Anyway, we'll wait and see when we get to the HB7. Apple just continues to float along its HB6. That's 33 times book value. You'll notice that it's broken a little bit below there, but what we really need to do is to see what the impending balance sheet is. And I suspect we're going to see that there's been more stock buybacks, and that means that the HB6 is going to be down somewhat and will remain very, very much on side in this stock. Not exciting, by the way, growth very modest, but nonetheless very profitable. And look at, when you're a $3 trillion company, you just have to own it. Alphabet has a very interesting kind of picture going back, and I'm going to look at the picture, and then we're going to see why the picture emerged as it was. Going all the way back at its peak at the bubble price, okay, it kind of traded either side, very uncertain trading, and when we have that kind of trading, it typically calls for lower prices, and that's exactly, of course, what happened. Got down to the MSG price, which is 5.5 times book. Again, very uncertain trading. Again, led to lower prices there. Now, we had the same thing happening here at the LSG price, which is 4.5 times book value. And I was expecting that we probably would have a fall to my projected low at its super growth price. However, along came the AI revolution, and the stock turned around. However, it is still trading uncertainly, back this time again at its MSG price, 5.5 times. So why this very peculiar and very uncertain trading pattern? Well, to answer that question, we really have to go back in history and take a look at the long sweep of Alphabet over the past 12 or 13 years. And here you can see the dotted line, of course, is the fair market value earnings. So very, very, very steady through that piece. And the stock essentially traded around its super growth price on either side. Well, when we got into the COVID pandemic and people needed to use their computers and shopping and all the rest of that kind of stuff more, then there was a surge in the earnings and profitability, and with it, of course, was a surge in the valuation, which carried right up to the bubble price. However, I think that the question that the market has is this sustainable, or in a longer term sense, is the company really, the earnings and the profitability really heading back down to that long channel? And I think that probably explains the considerable uncertainty of Alphabet. Anyway, for now, we've broken out. I think that the NASDAQ points higher, and I think we stay with the stock and at least until its bubble price. Microsoft, they had pedestrian earnings, I think the best we can say. About 10%. Unfortunately, the company did something which I don't like to see, and that is to say that they were kind of cautious about their outlook. Well, even companies with indifferent results like Netflix were anything but cautious and effusive, and of course that has driven the stock. However, if you're cautious cautious, then you're going to hold the stock back, and that's exactly what is happening. I think if you do not own Microsoft, I would wait until we have a confirmed breakout before I would buy at this juncture. And finally, Tesla. Well, Tesla broke out, broke back down again, broke out, broke back down again. What's been kind of going on here? Well, as I sort of think, what's behind this mass company? Is this an automobile company that is very expensive, or is this a high-tech growth company? For now, I think that I will go with a high-tech growth company, but remember, we never tell the market what to expect. Now, in summary, what happened last week? Looking at the FANGs, there's little evidence of impending market weakness. The FANGs have pretty much held in with their heavy focus on the AI excitement. For the FANGs, Amazon, Nvidia, Apple, and Netflix are holding in nicely above their current SVA support levels and look to me as if they want to head higher. Meta, with its new Threads platform, which has been designed to try to knock Twitter out of the box, is breaking out for what I hope and expect may be a final run to its bubble price at 7.4 times book. Hopefully, Zuckerberg will remember his promise to keep the pedal to the metal in terms of focusing on profitability, lack of which killed the shares in 2022. I understand that the numbers of Thread users have dropped off very sharply, and I hope that this is a wake-up call to Zuckerberg to focus on what works, not what he hopes will work. Alphabet was dithering around its MSG price 5.5 times book, and I suspect that the market, and I mean the NASDAQ and the Standard & Poor's, will now pull it higher. Microsoft had dull numbers, and unlike some who also had dull numbers, management did not wax poetic about its outlook. This is a market that wants to believe, and it does not particularly wish to hear the caution horn sounding. We now need to see a breakout here before we ourselves can believe. That leaves Tesla clinging to its HB3 price at 16 times book, with an open question hanging over its head. Is it an expensive car company or a cheap high-tech enterprise? For now, I go with high-tech enterprise, but I never tell the market what to think, and we will have to watch to see which way the market is going to jump. So that's a clean sweep of the FANGs. As this is a very heavily weighted group of stocks, I think that it's a pretty safe bet that the NASDAQ and the Standard & Poor's are heading higher. Nothing against the value stocks, which I suspect are biding their time, although the Dow certainly has enjoyed a nice little run recently. But this still looks like very much like the period leading into the high-tech stock peak 23 years ago in 2000. However, we're certainly not there yet, so let's just enjoy the FANGs. A final word to any of our viewers who may have come late to FANG Friday and may be wondering, what exactly is going on with this SVA methodology that you're watching here today? If you would like a thorough introduction to the analysis and why it works in practice, then please visit us at strategicanalysis.ca today. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at Nickel & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you next Friday.